With the rise of inflation and interest rates and a falling stock and bond market over the past year, many investors have been asking us, what are you guys doing and where are you investing your money? We've recently written quite a few articles about how it's important to know your alternatives if you have the slightest chance of increasing your net worth in times of inflation and rising interest rates. I'm joined today with the Director of Alternatives at Quiver Financial, Patrick Morehead, to discuss this exact topic. So Patrick, what are the alternatives that investors need to know now with rising inflation, a falling stock market, and falling bond market?
Yeah, that's right, Colby. I think the days of, all-time highs are probably in the rearview mirror. And so we wanted to give the viewers something tangible for them to think about, and that's pun intended. We're going to talk about assets that are not correlated to the stock market and offer a true diversification. Wall Street calls these alternatives. I call them sound investment strategies.
So, Wall Street calls them alternatives. You call them sound investment strategies. So give us an understanding of where is an alternative a sound investment strategy, vice versa. Give us more insight.
Well, first, I think it's good for investors' portfolios because it lowers the volatility, gives them true diversification, enhances returns, reduces portfolio risk, and it's a hedge against inflation, which we're encountering now. They can range from various types of real estate to private equity, commercial loans, BDCs, infrastructures, just to kind of name a few.
There's a lot to unpack there, Patrick. So I guess the reduction of volatility is what you're focusing on, some diversification outside of the stock market and the bond market. I get all that, and I understand most of those things. So give me an example. Maybe give me an example using how real estate could be an alternative and how it could help lower volatility in a portfolio.
Yeah, sure. And real estate is a good example to use because people typically understand real estate because they own their own home. And not only that, but they see how their home value has risen over time. And the assets are keeping up with inflation. That's what the hedge against inflation is. But because they own their own home, they have the equity value in their home. And if they have 50% of their portfolio is the equity of their home and 50% of their portfolio is in stocks, if we have a stock market pullback, well, that's not a 50% pullback over their entire portfolio. So it allows them to diversify their portfolio because not everything is exposed to it. Now, in regards to like the enhanced returns that I talked about, that's where the advantage really plays in for alts because you're direct ownership in those type of assets. And that direct ownership versus stocks, where you just own a piece of paper, allows you to improve your overall investment. So whether it be repairs or doing rehabs or remodels or things like that to bring that value up. Not only that, but there's tax benefits that are associated to owning real estate that benefit your portfolio. And some assets actually have cash flow, which all these kind of combined really help emphasize to bring those enhanced returns when it comes to an investor's portfolio.
So basically what you're saying is by diversifying outside of just stocks and bonds, bringing in alternatives, which could be real estate, and then there's others, is you could essentially be helping, the sequence of returns and reducing the extreme volatility that a portfolio could have. So outside of real estate, are there other alternative investments that you have your eye on or things that you have an interest in?
Sure. Like I mentioned at the top, there's many different categories outside of real estate that alternatives can be in. And, typically it's meant for institutional investors, people think, or that's what the Wall Street pushes, when in reality, retail investors can be in it themselves. And most investors should have multiple buckets when it comes to investing. Mm-hmm. And I strongly feel that the right financial strategies, having multiple asset solutions, can be an effective way for investors to ride out bear markets like we're in now.
Well, Patrick, that's good. That's good insight, and I completely agree. And that's why all of our clients are educated on these options, so that they understand the whole picture of what's available to them as an investor. So let's briefly touch on how people can purchase these types of assets and where they can be held.
Yeah, and going off of what you said, having good financial advice comes in handy to determine when and where to buy these type of assets. And most people planning for retirement have multiple buckets. You have your 401k, IRA, Roth IRA, and then various types of after tax. And clients can hold alternatives in most, if not all, of these buckets.
Well, there you have it, folks, and that's one solid strategy to handle this bear market. And if you'd like more information or ideas on how to better manage your portfolio, then visit the quiverfinancial.com website. Until next time, take care.